season tickets since the Giants became a team, so I'm on your side.
Good stuff. Good stuff.
It looks like I think Ben maybe is joining. We have a few of our attendees joining us as well. I'm going to have Annex people I think will be on video or might be off video for the initial discussion and want to come on as they're answering questions like posed to the group overall. We're obviously going to encourage folks to come on and so we can see their faces and feel like we're all sitting around one big table. That's how we'll sort of get into this. And again, we're going to get started in a couple minutes.
Awesome.
But for now, I'm going to ask you just our coffee chat, being that Ben is so aptly ready to go, and just find out where you're joining us from today. We'll start with you, Don.
So I'm joining from Westfield, New Jersey, hanging out in my home office, which I'm very appreciative that I have, and excited to be here and host this today.
Awesome. We're excited to have you. And what about you, Ben?
So I am sitting in the breakfast room of my home in New Jersey as well. And I have an office, but we're in the middle of construction, so it's actually being built up there. So, in a week's time, I would be able to be sitting in my new home office.
Okay.
So
that's exciting.
Yeah. So it's been going on for a while now. It's funny, during just as the things started to lift a little and open up, but we had already signed up for this construction, but hadn't started yet, and we were getting a lot going on. And I said to our main contractor, I said, if there's any concerns around supply shortage, just order it. I'll give you the money ahead of time. You just stick it in the driveway or something, right? Like just so you've got. I don't want to run out of supplies when the roof is torn off or something like that.
Right.
So. Luckily he didn't run into any of those issues, but I do have a friend who is in real estate and some construction as well. And he said they ran into problems where they ran out of things like pressure treated lumber when they were building a deck for somebody, just no supply. Yeah. And people were buying it sight unseen, buying whole truckloads of pressure treated lumber without actually even seeing it. Just said, we'll buy it. So Incredible what's going on, 30% price increases and things like that. It's just insane.
Wow.
Yeah. Might be something I mentioned on this meeting.
Yeah, I think that's definitely relevant.
Yeah.
It looks like Nathan is with us too.
Hey, how's it going? Hey, everyone. Nice to meet you guys. Yeah, great to be on.
Thanks for joining us. Well, this starts at noon, so I know typically people will trickle in for the first couple minutes or so, but since we're recording it, we'll have the recording to share with the group largely afterwards too. I'm gonna get things started. I'm Jasmine. I'm the head of experience at TechUnited. With me today, we have 3 experts from EY, who is the sponsor of this CFO peer network. And I want to just thank you all, of course, for supporting this group and TechUnited overall as an organization. And I want to turn things over right away to you to share a little bit about each of yourselves and introduce yourselves to our group. I'm going to ask the attendees also to give a bit of a hello and introduce themselves too. And then we'll get into a bit of our discussion about forecasting, financial planning, and overall, I think we'll get into a little bit of just what 2021 looks like for us as a group. So Don, I'm gonna start with you, being that you and I got this going in the first place.
Yeah, sure. Thanks, Jasmine. I appreciate you turning things over to me and helping to coordinate this along with Anna. So welcome everyone. My name's Don Bucciarelli. I'm an assurance partner out of our EY Islin office here in New Jersey. And while I know you all as CFOs who are joining are dealing with a whole host of issues to sort of stabilize your businesses and figure out what the remainder of 2020 and 2021 is bringing for you, I get the pleasure of then auditing those forecasts for purposes of goodwill impairments and long-lived asset impairments. So usually not the most fun thing that you guys will go through or your teams will go through with an auditor, but to make sure we're here to help and add some context and share experiences, I brought 2 subject matter experts with me here today, Ben Pickering and Nathan Chow, both of whom are partners in our strategy and transactions group. Different roles, and I'll let Nathan and Ben introduce themselves just so you can get a better sense as to what they deal with on a day-to-day basis. Maybe Nathan, you can just go first.
Yeah, absolutely. Well, nice to meet everyone virtually. I like how these things are very different. I'm in the midst, our world is changing, but I'm in the midst of trying to send my kids back to school tomorrow. So that's been a fun time to add into my work life. But yeah, so as Don mentioned, I'm part of the strategy and transactions practice. I sit within a team called Decision Modeling and Economics, which is a mouthful, but effectively we help clients with a variety of corporate finance modeling activities and FP&A activities. And more specifically, I've been, particularly since the start of COVID, working with a number of different clients on the forecasting topic. So this is extremely timely, and looking forward to getting into the discussion.
Thanks, Nathan. And Ben, can you share something about yourself, please?
Sure, yeah. So my name is Ben Pickering. I'm a partner in our basically our turnaround group. So I deal with situations that are in distress. And so a big part of what we look at is cash flow forecasting, financial forecasting, and contingency planning around different strategies of how to address what is happening or what might be coming. So, and excuse my Alexa, she's going to tell me someone's at the door. So I've been doing that for, well, believe it or not, about 30 years now, but I'm a CPA by background.
Thanks, Ben. Jasmine, maybe I can ask you to just ask some of the participants who've joined to introduce themselves before we kick off.
Absolutely. And now that we have a few more people trickling in, so we're going to have a bit of a discussion between Don, Ben, and Nate about sort of some of these predetermined, forecasting and financial planning questions that I shared with the group earlier this morning. And I want to encourage everyone attending to either turn on your video and raise your hand if you have questions, send them in the chat, definitely engage with us. This is meant to be an open group discussion. So I want to really encourage that. And we would love to see everyone's faces during this virtual roundtable. But basically, we're going to have a bit of a discussion between these three experts and the group, and then we'll open it up and have a little bit more of a group discussion as well. And that'll be the opportunity that you'll have to ask some questions of your own. And certainly if it makes sense to just pepper them in during the dialogue, that works as well. We want this to be sort of a collaborative experience. So I introduced myself already as a head of experience at TechUnited. I'm going to have Anna introduce herself, and then I'm going to invite those of you who are attending to either introduce yourselves. You can just put on your audio if you don't want to do your video, or say hello in the chat so we can get to know who's in the audience today.
Awesome. Well, thank you, Jasmine. I am the marketing and experience manager here at TechUnited, and I'm really excited to spend some time this afternoon with this group and learn a little bit more about what 2021 is looking like. And I think we've got some great experts to really offer their insights. So yeah, I'm excited to be here.
Sounds good. I'm realizing I have the list on the side, so I'm going to call on people to introduce themselves, being that I figured maybe we don't have everyone chime in at once. So I'm going to start with Roger, who I saw popped up for just a second, might be in the car. So let's try Roger first, and we can always circle back to him. But Roger, are you there?
I am. Hi, everyone. Good afternoon. My apologies.
No
like
problem.
One of the partners just mentioned, I am in the middle of sending my children back to school. No virtual school, in-person schooling, so I apologize.
Wow.
I'm transporting my daughter back now, but I am a managing partner of Elevation Capital Advisors, a small fund based in New Jersey. I apologize for the background noise, but very interested in hearing more about how the three partners on this call can help with some of those smaller funds as we seek to raise capital and we seek to deploy capital. Thank you.
Excellent. Sounds good. Thanks for joining us, Roger. I saw Mark just popped up on screen here, so I'm going to ask you to introduce yourself, Mark.
Yeah, sure. Hi, it's Mark Lewitz. I'm with Supporting Strategies. We provide outsourced bookkeeping and controller services to growing businesses, but typically the revenue of our businesses is about $1 million to $20 million. So we do everything from close the books at the end of the month, pay the bills, manage accounts receivable. We do robust financial reporting. I've been around for about 15 years now. We're 100% virtual. And we've been that from our founding. So virtual bookkeeping. That's primarily what Supporting Strategies does. I'm out of Princeton, New Jersey, too.
Got it. Thanks for joining us. I see
Thank you.
Greg and Ken have each popped up. So Greg, I'm going to put it over to you to say hello.
Hi there. So my name is Greg Rosoff. I'm the Chief Financial Officer of a company called All Things Media. We are a digital agency, so basically anything digital that companies' marketing initiatives need to happen, we do. So we do some really cool digital experiences, marketing initiatives for companies like Mercedes-Benz and BMW and New York Life and some very big companies. And we're very proud of the work that we do. And while the pandemic has been, horrible in many ways, and it hit us hard to begin with, because we specialize in virtual reality and virtual, experiences, we've gotten a lot of positive feedback from our clients in terms of what we can help them do in this type of environment, because obviously everyone is working remotely, and we can help with that type of stuff. So we're located in Mahwah, New Jersey, which is where I am right now.
Great.
Sounds good. Thank you for joining us. Ken, thanks for joining us today. Want to say hello?
Hi, Ken Tomlinson. I am a CFO with a company in Philadelphia called NextFab. So we do a number of things. So we rent out machines and other things to people through a makerspace. We run a product development company, so we do early stage hardware products, electronics, plastic injection molding, stuff like that. Also, I'm a general partner of a venture fund that invests into hardware companies, and I do the books for those. And we also have some real estate holdings under NextFab as well for the locations that we occupy. So a lot going on. So yeah, definitely interested. But I live in Cherry Hill, New Jersey. So, and we're all virtual. So my kids are upstairs doing school right now. So.
Got it. Very nice. Well, thank you for joining us. So I saw Adair had put his hello in the chat, that he unfortunately can't do camera and mic, but participating with us today. I think the last person we have to say hello is Robin.
Yep, thank you. Robin Lehman, I'm the controller at ABS Capital Partners. We are a growth equity firm focusing on the healthcare industry and backing business and tech-enabled service companies. We are headquartered in Baltimore, Maryland.
Got it. All right. Thank you for joining us today. So again, all of you that popped on video to say hello, I hope you'll continue to stay on or pop on when you have questions or turn on your mic, whatever works for you. I want to make sure we continue hearing all of your voices throughout this forum today. But I am going to put it right back to Don now that you've gotten to know everyone a little bit so we can get things started. Sound good?
Yeah, sounds great, Jasmine. Thank you. And thanks to those of you who are on video, and certainly to the extent any of you others can join, I think that'd be great. This is really structured to be a roundtable session. It's not, intended to lecture you guys or just present in a formal way. It's really intended to start a dialogue, understand what issues you guys are facing, and then just help share some of our perspectives, Ben and Nathan in particular, dealing with, these types of issues around forecasting from a series of different perspectives on a regular basis. So the success of the session we'll have here today will be dependent on your participation. And so I really just encourage that and ask for your support there. With that though, I think to get things kicked off, Nathan, maybe Nate, I could ask you just to share some of the key topics or issues that we are seeing as it relates to forecasting that seem to be top of mind for our clients that we deal with on a regular basis.
Yeah, absolutely. And I think I would start off by saying I think that's changed as the pandemic has progressed, right? I think initially there was certainly quite a bit of chaos, and I think a number of folks, really didn't know what to do. People were asking questions about, is margin even important as we look at these businesses, right? Like how much are people really going to look at that from an investor expectation perspective? Maybe a few things as things have become more certain. I think, again, this is probably a broad generalization, but I think things have largely stabilized. I think probably not as dire as people had thought, at least up until this point. I think going into the back half of the year is where I think companies are still seeing some headwinds, and there's a lot of uncertainty. And so we've been in a number of discussions talking to clients about it. Is there any way to bring some type of certainty to that uncertainty? And I think, the way we typically answer that is, there are a number of sources of information that we look at to better predict, or at least come up with a series of scenarios that are potential, right? And I think, it's hard to say that no one can predict the future about how things are going to evolve. And there's a number of different things that will impact it. So for example, we've had clients come to us and talk about bad debt, right? And so bad debt's, that's a big topic that's coming up, but largely some of that's been masked maybe by some of the government programs right now. And so the idea is, once some of those lapse, and if there aren't new programs in place, are like utilities providers or telcos going to see the hit of that. And so we've been working with them to try to figure out, what are the types of information that we can look at for that. I think the other big piece is, going forward, there's this question of, is forecasting fundamentally going to change, right? So there's a typical, you have your LRP process, where you build your long range plans, you have your budgeting cycles, and that's all standard. But now people are trying to figure out, are you going to develop a long range plan on a rolling basis? Because, maybe it doesn't make sense to do it like a year in advance and not touch it. And so I think there's a number of things that companies are still trying to figure out. We're trying to help a number of companies with that. But again, maybe that's just a taste. I mean, happy to take this in any direction, but I don't know, Don, if there's anything else I should add.
No, I think Nate, that's a good start. And I think, going into the agenda, and really guys, I do want us to just drive the discussion with what's most important to you. That's the objective here, not necessarily to hit on all the questions here. So as we go through, I'd like to try to get a sense as to where you guys are in your process, what challenges you've maybe had to deal with. But what's interesting to me is we think of the pandemic often as just being this challenge and this negative situation where a lot of companies are facing turmoil and tremendous shifts in their business. And I think that is true for many businesses. Even hearing Greg, you talk a little bit about your business after that initial hit, you start to realize there's all these new opportunities, especially if you're a virtual business. There's been a lot of companies that have had tremendous success coming out of the pandemic. And while some people don't like to hear about that because others are struggling, from a forecasting perspective, you're similarly challenged in dealing with an entirely new environment where you're not sure, how sustainable this new growth is, how much, how much weight to put into that. And so regardless of which side of the pandemic you've currently fallen on, you're likely encountering some form of change that you have to navigate through. So I guess with that said, and hitting on the agenda, I'm curious for the CFO participants on the first item, how are you guys approaching this process? And can you share with us maybe where you're at with the process? Typically the fourth quarter or late in the third quarter is where companies are starting to forecast for the following year. Maybe you guys can just share how that's going, how you're approaching it, and what some of the challenges or questions are that you may have. I won't call on anyone in particular, but would ask for your volunteering to speak.
So I think that basically, companies in general, I think, try to use their spend that they have. And I know that this year has been really weird with that, but generally companies have a spend that they have to, exhaust by year end, right? And generally you have a good feel on what's going to come your way by end of second quarter, beginning of third quarter. This year has been all over the place in terms of how companies are going to allocate their spend, if they're going to allocate it at all. They're all scared. They don't know if they really want to spend, even though they, have it in their budget and they need to, quote unquote, spend it by year end. There's been talk about, extending their spend to, first quarter of 2021. But that being said, companies are realizing that we are going to come out of this at some point, and they are going to have to start conducting business again. And part of that is their marketing strategies and how are they going to market themselves, especially in this new age of COVID. How are they going to present themselves going forward as COVID friendly, the firm to go to for, whatever it is that they're dealing with in a safe and COVID friendly type of way. And, so I think the companies are waking up and realize, hey, the world is not ending. We're going to have to deal with this, and we're going to have to approach this head on and do our best. And so I think that, from our perspective, we're seeing companies all of a sudden engaging and, looking to ramp things up as quick as possible, which is very weird because, we're now very late third quarter, but here we are. And all of a sudden we've been slammed with, get us this proposal, what can you do here? How can we market ourselves, going into first quarter of 2021? And it looks like not only budgets, but projects are going to get extended out. And so, I think we're in a world of uncertainty, but I think that companies are realizing that we're not at the end of the world and they are going to have to spend and market going forward, not only fourth quarter of 2020, but first half of 2021 is what they're really looking at right now. And I would anticipate and expect business not only to be, very busy, fruitful in the fourth quarter, but I expect this to be very busy and a lot of proposals going forward for the first half of 2021. That's what I see anyway.
That's great. Thanks for that insight, Greg. I guess, Ben, just you and I talked a little bit about CapEx versus OpEx earlier. And Greg, when I hear your comments around spend, often you think about, hey, I've got to get my capital, I get this capital budget, I either use it or lose it.
Right.
Especially, depending on the size of your organization and how much of a key metric that might be, and we'll touch on key metrics a little bit. But Ben, what are we seeing in that respect? Are we hearing the same type of challenges from our other clients around just with the uncertainty, how they're going to deal with that spend and how they're planning to manage that?
Sure. Yeah. And I will back up the timeline a little bit to say how it's changed, much similar to what Greg said. I think in the initial stages, there was a lot of, the initial drive was certainly, we were advising all our clients the same way, is go grab what liquidity you can, right? You don't know how long this is going to last. You don't know how deep it's going to be. Go and grab all the liquidity you can. So people were drawing down on their lines, pulling any cash that they could, and really, frankly, hoarding it as best as they could in order to make sure they had enough cash to last a long time. Now, as things have come back online, as Greg said, now the discussion is really around where to spend, right? And so similarly, as Greg, you mentioned as well, the question then becomes, again, uncertainty still exists, right? We're not sure exactly how long this will last for and how much of an impact it will have on the business until we return to normal. And is that normal going to be the normal we experienced before or some new level? But then how do I deploy that cash in the best way for me, right? Am I investing in the longer term or am I investing in the near term? And those are tough decisions to make. It also depends on how much capital you have access to. And I think touched on it as well as also here is what's happening to your working capital, right? There's some big changes. So I think these are all topics that I think we'll touch on during the course of the call. But when we start to look at it, from our perspective, from what we do, we look at it more from a cash perspective, like a true cash flow, not a three-statement cash flow indirect. We're looking at a real cash flow, direct cash flow method, because what happens when you're doing a financial forecast versus a cash forecast is the reality of a cash forecast is that it's truly lumpy. Where things get smoothed out in a financial forecast, from a real cash perspective, there's lumpiness, right? Things like capital expenditures are lumpy when you pay for them. Even things like insurance, if you haven't financed it, that can be lumpy. Payroll bonuses, they're lumpy. You start to take a look at these types of things so you can understand where your dips might be and how you're going to finance that dip before you get your cash back again. So a lot of that sort of short-term nature is that view. And then on a longer-term nature, we also look at, the contingency planning for our particular clients. We're saying, let's look at it as here's the new level of business. But now, what happens if it picks up? What happens if we have another stay-at-home order where we go down as the fall is approaching and flu season's coming? That could be a reality as well. So we were running different models with different types of forecasts depending on the nature of the business as well. I mean, some of you who were on earlier may have heard my own personal story of we have some construction going on and the costs of certain supplies have gone through the roof. like pressure treated lumber. You can't find it, let alone when you do find it, it's 30, 40, 50% more than what it would normally cost because of people just going out and literally hoarding it and using it like a currency to trade on. So that's another part of your forecasting that you have to look close at. So I'll stop there because I could talk forever about these types of things. But there's obviously a lot that goes into it, which is not your typical normal forecasting that you would do on an annual basis or even a quarterly basis. It's a different thought process to go through now.
That's helpful then.
Can I actually ask a question about that?
Sure.
Are there obviously this pandemic is unprecedented, but are there other examples in history of how companies have accounted for and developed the right plans and forecasting, like for example, during times of like, even going back to like the Depression or certain wartime, like, are there other similar financial models that you use, or is this really like taking as much data in as you can that's been developed over the last year and trying to predict?
I'll give you
history there.
Yeah, I'll give you my view. I mean, the business activity, the ability to forecast, those types of things are a lot more sophisticated than they were even, at the end of World War II. So, the pandemic is interesting. You mentioned war because that's one of the analogies that I drew when this started to happen, right? You have, unfortunately, people who didn't have a lot of cash available to them became all of a sudden not just poor, not just unemployed, but now there's no health care. They were running out of food. They were, unable to find shelter. It really became very much a wartime, a situation, unfortunately. And so, but I do think, in my view, at least, businesses have changed so dramatically. It's very difficult to go backwards in time. No one was really doing the same kind of financial forecasting and modeling, nor were the businesses as widespread as they are. Even if you're not a global business, you're a domestic business, but you're not staying within the certain borders of your small town, right? You're going out and stretching across the state or across the East Coast or even across the country. So, there's a lot more that's happening in today's world. So it's very difficult to find that type of precedent, right? I think 9/11 is something that we looked at and said that it's somewhat similar to that, but 9/11 was a short full stop before things came back to normal. And then you had certain industries that were impacted, obviously airlines, but not like what we're seeing today. This is across the board. I think as Don mentioned, some companies have actually done quite well as a result of the change in the way that business is being done or what's become more important to people. Certainly, like I said, all the home renovations and things like that are going on. It's interesting to see when you're searching for things, what is in short supply, like new washing machines and dryers. That's in short supply, I can tell you that.
Yeah, Ben, just to add to that, I think one of the things that we've done is, there's probably 4 or 8 different events in sort of history that we're looking at. And again, I think historically, maybe, we do a lot of data science forecasting. So historically, maybe you look at the original curve and you try to apply sort of an exact math to that curve, right? Whether it's the financial crisis, other events that we looked at were like SARS and MERS, the impact on the local economies, within Asia and the Middle East. And again, right now, it's not so exact, right? Because there isn't an event that's a corollary, but I think we look at these events, including a financial crisis, as informative to what are the types of scenarios we should be thinking about, right? Because we know that the mechanics of this are very different, right? And we haven't seen this in a very, very long time, that the economies are very different. So those are a number of things, we're trying to use as much information as we can to, again, predict what's a very uncertain future right now.
Yeah. Jasmine, your question is interesting as well, because as Nathan mentioned, one of the things that one of our groups is doing is modeling the impact of the pandemic on different parts of the country to see how it impacts the hotel and leisure businesses. And what they've looked at is data that said, what is the typical traveler to that area? Is it a business traveler? How much is business? How much is for leisure, entertainment, things like that? So you can tell kind of what's coming back and what isn't. Obviously, business travel is not coming back, but some of the leisure is coming back a bit. So they're using that as predictive models then to determine, how much occupancy they might have, and how, in advising, hotel chains as an example, as to how many floors they should keep shut down versus how many floors to open up in anticipation of a return of some activity. So there is, although there's not historical, comparatives, there is a lot of empirical data that we now can draw from, because there's just so much more data than there ever used to be to make business decisions on.
Got it. Excellent. Don, I didn't mean to hijack your agenda.
It's great. It's great. Thanks, Jasmine, for chiming in. And I guess, Greg, just a question back to you. For your company, where are you guys in your budgeting process? Has that changed compared to maybe historically what your normal process would be? And what are the, what sort of length, are you just focused on next quarter, maybe 2021 at this point? Or are you guys trying to is there any need for you to be doing longer term forecasting at this point?
So our company is unique in that, as an agency, we sometimes get projects that last years. Like, our Powerwall from Mercedes-Benz was a marketing tool that we created literally in the second half of 2015. And we still, do that project on a yearly basis. So we get a PO at the beginning of the year, and, it's a year by year thing. And, we anticipate it getting renewed next year. But that being said, those projects are obviously few and far between. We also we just got a huge scope from Volkswagen, which will carry us into 2022. So sometimes the forecasting is easy, right? We have these big projects, we know essentially what the scope is going to be, we project out, and we have staff on hand that we know we're going to be using for those projects. It's the very quick turnaround stuff that we get from, a smaller size company, or even, a New York Life will call us. We need an e-learning class. We need it, in like a month, and all of a sudden it's hair on fire. Hire some contractors, get it done. So it's very, very tough from my perspective to just forecast what we can anticipate from the very short term. We do have conversations with a lot of our clients on what do you see, what do you think you're going to be spending, where do we fit in with your budgeting, what do you think you're going to need. And we come up with some thoughts and some prospective numbers that kind of make sense, but it's very, very tough for me to accurately forecast what our budgeting or revenue numbers are going to look like. And that being said, back to the conversation that was taking place 5 minutes ago, I think these economic events that occur are so different on each of their own. Like, you go back to 1918 and the pandemic back then, right? The economy was so much different than it is today. Today, what we do in a year, it took them decades to accomplish, right? The amount of information that flows through technology. And I go back to when I got my first PC back in 1997, I spent like $4,500 on an Intel with a Pentium 2 processor and a 13-inch screen and a printer. I spent like $4,500. And today I'm hearing, people tell me how expensive an iPhone is. It's dirt cheap, right? For $1,000, you're getting, a million times more computing power and, the ability to do all these things in the palm of your hand. And so I think that, basically doing an apples to apples comparison for past economic events is virtually impossible as well. Like, you really have to just focus on the here and now and what's happening, what's going forward, and how you're going to deal with it. I find you can learn lessons from what happened in the past and how you dealt with things, but I think that trying to look in the past and figure out what you're going to do in the future, especially in today's world where technology plays such a prominent role in how we run our businesses and our lives, it's virtually impossible in my opinion.
Yeah, you mentioned something there. Sorry, I'm going to hijack now. So you mentioned a couple of things there around sort of different ways to look at predictive information, right? And how different it is now. I think it was Robin who mentioned a lot of either business activity or investment in healthcare. I do a lot in the healthcare and pharmaceutical space. And one of the things that I found has been really, a concern as far as how to look at the future is unemployment. And you say, well, what's unemployment have to do with healthcare and pharmaceuticals? Well, the answer is unemployment means fewer people on insurance. So then it becomes the question of, what type of procedure is it, or, treatment is it, or drug is it? Because as unemployment is so high now, we can see that there's going to be a change in the level of the covered lives from an insurance perspective, which is going to drive a lot of change. It's interesting. One of the groups that I spoke to was a EY sponsored event, was actually talking to a lot of small medical practitioners who were focused in on basically plastic surgery. And so, they were very much concerned about when that would return and what kind of strategies they needed to deploy to try and preserve, their equipment and their locations and things like that, because, it was harder for them to see a return to normal. So I think, healthcare is one. I think, Ken, you mentioned injection molding. Again, another area, this is going to sound strange, but another area near and dear to my heart. I've done a lot in injection molding. But there you're looking at what is the customer base, right? You've probably got a lot that's going into automotive. You got a lot that's going into consumer products, but then the question is what kind, right? And then as well, with what's happening in the oil and gas industry, right? I'm assuming that pricing is pretty good right now, but at some point they're going to want to jack those prices back up when that particular industry recovers. And then you're going to feel that in your raw materials as you start coming through. So when do you kind of put that into your models as well? So, it's a much different type of modeling than you've done before. And that's why we've actually been running for our clients different models, because it's a contingency plan. You could say, this is where we think you're going to go, but maybe you need to make this scenario and this scenario so that you've got a playbook that you can follow in case something goes off of what your initial plan was. And that's really important to do, to have those levers to pull as well. What can I do to change the trajectory, or what can I do to react to the trajectory that's happening to me?
And maybe just a follow up for Ken or others, similar to the question I asked Greg, where are you guys in your process of budgeting? Has that changed? And what periods are you focused on? And really, how far out are you looking in that process?
I can talk about what I did. So we completely threw out the original plan and completely over the month of June redid everything. So it took the month of June to just be like, all right, July 1st, we need to have a new picture of what at least the end of this year looks like. Trying to keep our long range plan like still in place. Like, how can we get close enough to where we need to be this year to not have to kill ourselves later? But actually, one of the interesting things that you mentioned, like companies doing better, like we have such a variety of things going on. The part of our business that took the biggest hit was in-person stuff. We have physical locations, people come in, they use machine tools like they would go to the gym. So they have a membership, they pay, monthly dues and stuff. And that took a big hit because we couldn't have people come in. But our product development side, so we have a very small team of product development, and it was just like word of mouth, friends. We had a couple of contracts with local hospitals and other groups to kind of just like build some prototypes, tinker on stuff, and make some things. And that absolutely blew up throughout the shutdown. And thankfully we got an exemption from the state to allow just a few of our folks to go in and use our shops. But now we're looking at that and thinking, like, is that the thing that's going to grow next year? Like, can we rely on in person? Should I just be carrying that kind of like retail side of our business flat for next year and hope that it stays that way and really focus on other things? So we already started. So like I mentioned, like that part of the business was just a, word of mouth and things like that. So we actually started in June to build that out as a completely separate brand. So website under development, hiring people to figure out what the marketing plan is going to be, and starting to kind of say that we're going to push that next year as a big part of our business and hope that we can grow that, because a lot of that can be done not in person, or one person running a machine can take care of it. So like design work can happen at home, go into our shops, run whatever parts they think they need and do some light assembly and stay away. But that's what's been interesting for us. The other one that's been fun is I mentioned the investment fund. That's been, we tried, part of what we said we want to do is not slow that down, because we also see that as like our way of helping things come back. But we've also seen like a lot of issues with that. I was just emailing back and forth. We ended up bringing a lot of people from Canada into Philly to that we invest in, and then they locate their company with us for a while. And a lot of them are like, we want to do it, but obviously because of what's going on, like we can't come down there. So we're trying to figure out like, how do we invest and help the Philly metro area, but also like stay within those rules. So it's also helped us to have a broader reach with some of our investing. We were investing primarily just in Philly metro, but we do it in a cohort investment. We do 8 investments a year, 4 in the spring, 4 in the fall. And we had 210 people apply and pitching for the fall investments, and not a lot of them are not from the region.
And you mentioned sort of throwing everything out. I think we've seen that with a lot of clients starting from scratch. And you mentioned also, Ken, focusing on just the second half of the year.
Yeah. Typically,
would you build a multi-year forecast? Is that typically part of your process? And has that sort of just been put aside for the time being?
That's been put aside. I'm going to redo it for the next couple of years. We had a goal, a 5-year goal that we wanted to hit. And so, we've just kind of been, like I said, I changed the second half of this year, which the other weird part about this is, you mentioned cash, because we were shutting down physical locations, but still doing a lot of work for other clients. It ended up being weird. We're like, our expenses ended up dropping more than the revenue dropped from things. So we ended up okay through all this. Now what's tough is like, the revenue is still lower than where we'd like it to be, but everyone wants to go back to behaving like it's normal times. And so, we tried to kind of, we're trying to figure out kind of how to get that mentality out of folks kind of being like, all right, well, we're back in the shops now. I need to buy this. I need to get this. We need to worry about this. It's like, you can buy one thing and then maybe a few months from now, we'll worry about this other stuff. So it's trying to change that mentality a bit. But yeah, I'll be going back to the multi-year plan, hopefully, and readjusting, just meaning that we're going to have to do more for the next 4 years. So
helpful. So maybe just shift a little bit over to key stakeholders, which is the next item that we touched on the agenda. I think, we've got a group that seems like mostly private companies here. So I presume that would mean analysts aren't necessarily as much of a concern here, but for you guys who are working through your forecasts, are you mostly looking at investors? Are you all dealing with creditors and challenges there? And how, if at all, has that changed in terms of the process and maybe the level of help you seem to be getting from those parties who are interested in what your forecasts look like?
And don't forget, if you're off video, you can just unmute yourself and chime in, or if you want to raise your hand, we can pick on people too if we want to have our own virtual classroom. I know there's some of you that have unmuted and muted a few times. I know there's people that have insights here.
I'll chime in again. Seems to be. The 2 owners of our company actually tasked me because I have a Wall Street background, and I'm involved with some people who are involved in venture capital, and I do some work for a hedge fund. So I have connections, and they basically they're creating a virtual platform that allows you to basically log in and get a sense of being able to walk around this this area that a whole bunch of people are going to be in, and basically behave like you're in an area that you would interact with in everyday life before the pandemic hit. And it's really, really cool. And they're looking to basically do a one-off from our company to basically raise some capital, build this out appropriately so that they can market it and create its own entity through that. And so, I've been tasked with trying to come up with some players who might be interested in raising some venture, in investing some venture capital into this platform and taking it as a one-off and going that route. And so I think things like that are going to be more relevant going forward. I see people possibly looking at this as an opportunity to create those one-off companies or platforms that might work in the COVID era to kind of go a different route than their traditional business might have led them on. And so I see definitely a need for capital for platforms and thoughts like that, investment ideas going forward that will flourish in this type of world, because I don't think that going back to the way things were last year or the immediate future is not going to look anything like it was a few years ago. I think we are in this change of how we do business and how we interact with people, business travel. I think this is going to be with us for quite a while. I don't see it going back to the way it was for quite some time, and I think a bunch of people are embracing that and going to go that way.
That's helpful. And maybe Nate or Ben, given that you guys obviously are dealing with a whole host of companies, what have you guys seen that have maybe changed in terms of key stakeholders? Who are clients most sort of focused on, and how has that maybe changed during the pandemic as compared to what their normal process historically has been?
Yeah, sure. Happy to go. And I think maybe just to touch on Greg's point and Ken's point as well, right? Just thinking about, hey, maybe there's a shift here in how we need to be thinking about our business going forward. And I think the idea of companies that can stay sort of nimble to the future, I think there's probably going to be some success there for them, right? Regardless of the uncertainty, it's those. And I think you've probably seen that through the crisis, right? The companies that probably pivoted or were able to pivot most quickly, some of that's probably based on how much ingrained sort of infrastructure and legacy business they had, but those that were able to pivot quickly to capitalize on the opportunity, I think we're probably able to do that, right? And take advantage of the fact that there are, probably still folks willing to spend and invest. I think from our perspective, maybe I'll just answer it in one way, which is we've got some clients that a number of the strategy and M&A folks are starting to be more and more drawn into this idea of forecasting. I mean, because I think there was a downturn for a while in the deal markets and the M&A markets. So I think some of these folks probably didn't have as much to do as maybe they did typically. And so they were being asked on the strategy side and others to participate more heavily in what's the strategic direction of the business, looking at benchmarking forecasts on the cost side, right? Understanding, how taking a look at the business and understanding like how's my IT costs relative to the rest of the functions. And maybe that's work you would have looked outside for some, external guidance a few years ago. Now you're refreshing that using sort of internal resources. A lot of burden, I think, on the FP&A teams who probably are used to taking a model or LRP from one year and just applying some type of growth rate and just saying like, yeah, this is next year's plan. And we had a client tell us, and this is like a major company, they were like, look, this is LRP, right? We just take last year's number and we're gonna grow it by X%, right? And that's gonna be the number, and then we'll just back into everything else and we'll work it top down. Now I think everyone's being forced to revisit not only like how they do it, but also, the mechanics, what they're using to drive those models. I think that the factors, and so everyone's just talking to each other and trying to figure that out. So I think that the consequence of that is certainly there's been a lot of pressure on FP&A and finance teams to, forecast and reforecast. Some clients are doing it weekly, some are doing it, monthly, some are doing it quarterly, where maybe it was more of an annual process. So I think, hopefully that answers part of the question, but, from a people perspective, I'm sure your teams are all probably, hoping that this has some conclusion here soon, because I think there's been a lot of turmoil, at least from their perspective. So I don't know, Ben, if you've got. anything else to add there.
Perfect timing, as I had the crew here in the middle of their.
Hope we lost.
There we go. There we go. Sorry. So that was perfect timing. I've got a construction crew here that was just in the middle of vacuuming and cleaning up, and they stopped just as you stopped talking, Nathan. So I apologize if the noise starts again. Yeah, I think, what's interesting now, I'm finding that, well, I'm not sure there's necessarily different stakeholders than before. I think how you're treating some of the stakeholders has changed. Certainly, let's start with the basics of your financial institution, whoever you are, getting your cash from. There's a big change now in certain businesses, especially if you're on a borrowing base, where your receivables may still be good, but they're aged because everyone went into that, I'm not going to pay right away. So getting in front of those types of issues with your lender is a big thing as well, to make sure that you can keep your borrowing base fresh. Otherwise it ages out, and then you've got a constriction of your cash that's available, and sometimes you end up having to pay it back. So a different type of arrangement with your lender. And then that also leads to customers where again, if somebody's not paying, but they're a good customer and you want to continue to supply them, now you've got to get a little bit further underneath what's happening to them and understanding whether or not that's you're effectively part of their credit now, right? You're a credit risk beyond what your normal terms would be, right? It's your net 30, maybe now it's becoming 45 or 60. So you're taking a chance with them as well. So now you're having to spend more time understanding the credit risk of your profile of your customers and how they're being impacted by the pandemic. Same thing on the supply side, right? You may have key suppliers to what you're receiving. Ken, I'll pick on you again, just talking about resin suppliers and things like that. That could be the color supplier for the resin as well, right? Depending on what color you want to create. There's other suppliers out there, depending on what you're making. If it's going into automotive, then you've gone through that whole PPAP process to get approvals, and so you need to make sure that what you're using is going to comply. So even alternatives may not necessarily be easy to go out and get. So it's these types of things that are creating. It's certainly a lot more work and a lot more effort that goes into it. And we're seeing that a lot in our, in a variety of our clients that are now having to think and go a little deeper, both on the customer and the supply side, and also with the lenders as well.
Yeah, and you start to see how all these concepts we're talking about come together. I think when we think about stakeholders, Ben, you mentioned suppliers. I've worked with a client who was in good financial health, continues to be in good financial health, but very much working capital focused company, a lot of turnover of their inventory. And, they concluded pretty early on that their suppliers were very focused on them being able to prove that they had the cash, that they weren't going to get the supply unless they could prove they had the cash. And they quickly realized that telling the lender, hey, we've got this line of credit that's untapped, wasn't the way to go, and they just drew down on the line because it was a lot easier to show them a bank statement with a big cash balance on it. And that obviously affected their liquidity. Fortunately, debt's cheap. Cash is cheap if you can get it for the most part for a lot of companies. So it hasn't impacted them too much, but it certainly changed their business model. And I don't think historically they've been as concerned about being able to get supply until cash became such a key aspect of their ability to do so.
Yeah. And this next point, maybe for Roger, although Roger, I wouldn't blame you if you don't want to have any input on this, but for those that we're particularly running funds and you've got investors, right? The question then becomes, and we've had it with some clients where we had a refinancing that was lined up for a company and it got pulled and failed because one of the investors was a fund that was its investor base was then drawing down on their investment, so they no longer had the cash available to make the investment that they wanted to do. And so then you get to that question of, do you drop the gates and stop the redemptions, or do you let the redemptions happen knowing that you're going to be forced into selling assets at a time when, it's not a great M&A market. So, that's another consideration when you're thinking about it, depending on the nature of your business is what do you want to stay in versus what can you afford to get out of, and how do you want to treat your investors? which is totally different than what you would do in a normal situation, right? So, yeah, very, very different mentality. The other thing is what we're seeing as well with with some of our clients is traditional lenders. Again, traditional lenders want to be traditional lenders, right? At the end of the day, if there was a default, they're more inclined to provide waivers and covenant relief and things like that during this period of time. So long as you've got some, again, reasonable forecasts and planning that shows the contingency of what happens if and how you're going to survive that. Some of our clients, we've expressed concern to them when the traditional lender became a non-traditional lender. In other words, it went to, from use a Wells Fargo or a Citi or even a local regional bank that really have no interest in owning the business or even owning the collateral, quite frankly, to some type of fund. Right. Once the funds start buying into your credit, right, funds don't mind swapping debt for equity, and that's a big concern. So when you see that transition happening, sometimes it's might be your only choice, or sometimes it's the lender's choice where they've sold. But you just have to be a little bit more aware of their ultimate strategy or ultimate options for them may be different than a traditional lender, and so you have to be mindful that while you may think, from a traditional lender perspective, you've probably got more leverage to get waivers and relief and things like that. From a fund perspective, they may actually not mind if the company defaults, because then they can use that as a lever to try and do, like I said, a debt for equity swap. So sometimes there's more behind what's going on than what you see. And so it also depends on the nature of the fund. But you can see hedge funds that are acting more like PEs at the end of the day because of the types of investments that they're making and how they're doing those conversions.
And so maybe just shifting gears a little bit over to more key metrics. We talked a little bit about capital expenditures earlier, and Ben touched on also the difference between different types of forecasts, really focusing on cash flow forecasts as opposed to necessarily just full financial forecasts. And then from a KPI standpoint, I've seen companies that have just had to, in this context of how do I forecast in this uncertain environment, this is an unprecedented event. A digital advertising company, for example, which is pretty recurring in nature in terms of their level of volumes, having a huge immediate dip in their business, which is historically consistent for the digital advertising space, to where they're now looking at disaggregated daily metrics, trends, to try to understand what that looks like, what their leaping off point is going to be come the end of 2020, and do they have any chance of really getting back to their long-term forecast within a reasonable time period. So key metrics, also become a key part of the forecast and what's relevant to your key stakeholders. Greg, again, you touched on capital spend, but for those of you on the phone, what are some of those other key metrics in your forecast that you might be most focused on? EBITDA obviously tends to be a consistent one, but what are some of the other things you guys are focused on?
Feel free to drop it in the chat or just chime in, everyone. I know there's some of you that have just joined, but feel free to just jump right in. And we have Roger, Robin, Mark, and Kat's joined us. No one has any key metrics that they're forecasting their business on. Everyone's just doing EBITDA, huh?
I will say this, right? So one of the things that I've been paying attention to is we still have an office. We have a huge office, and we generally have 3 people in the office on a daily basis these days, right? And 20 some odd working from home. And we don't see that changing anytime in the near future. Meanwhile, we're still paying our rent. And so how is this going to play out? How are companies going to adjust for, the size of their office space? And are they going to downsize and start, having people regularly work from home and eliminate a lot of the costs that's involved in having a huge office, having, that office wired, for all the technology that you needed to have? How are you going to adjust when you need to ramp up or ramp down? I think that's a fascinating question for the future. I know it doesn't involve today's forecasting question, but how are things going to, how are CFOs going to adjust their forecasts for rents and for infrastructure that, may or may not be needed in the future? And how are people going to account for that? And what is technology going to bring us to when it comes to virtual offices, and or are we going to go back to working in a regular office environment? I think that is a huge question that in terms of dollars, huge amounts of dollars for not only companies that have these needs, but for landlords who own these buildings. Are they going to be able to rent them out? Are they going to need to refurb? Are they going to have to basically squeeze more people into a place and lower rents to get them in? How is this going to work out? I think it's a fascinating question, and it's from an economic standpoint, I think it's very relevant. So
Greg, I always like to take opportunities like this to say that from any activity that you're doing in your business, there is always an opportunity, right? For anything any activity. And the fact that you're paying your rent, continuing to pay your rent for office space that you're not using, actually provides you with an opportunity. And the opportunity is that, when we talk to, and I apologize, I know some folks on the, when they introduce themselves, have mentioned that they've got real estate investments. So I'm sorry if I'm giving anything contrary to your needs, but we have the same thing. We have clients, some of which have asked for relief from their rents, et cetera, and others who are paying on time. For you, Greg, you're paying for rent for space that you're not using. This is a really interesting opportunity for you to sit down with a landlord, if you choose, right? If this is to your advantage, to say, I'd like to negotiate something different on my lease. Now, maybe that's shortening your lease because you believe that you're not going to need the space in the future. So now why don't you negotiate a shorter lease term? Say, I'll continue to pay you on time. Maybe I'll post an LC so you've guaranteed it for the next, year. But I'm going to guarantee you cash flow, and in exchange, you're going to cut a year off my lease. So that
I had something similar to that type of conversation with our landlords. Obviously, I mean, I would be negligent if I didn't.
Yeah.
And the response I got was, "You have a lease. We're not getting any relief from paying our mortgage. You need to pay your rent."
Right. And some are and some aren't. And it's interesting because, again, we've got clients who are in that business, and some are providing relief and some are not. And so it really, it's an interesting opportunity to sort of open the door for that type of discussion, right? Because it goes back to exactly what you just said, right? What is the future for you in your business as far as your office needs, right?
I will tell you that we have 13,000 plus square feet, right? And the downstairs portion of the building had been vacant, and they rented it out, I guess, at the beginning of 2020. And these guys, they're in the medical equipment business, and they've been booming. And so they actually had a need for 6 months for some extra space. So they actually took half of our space for 6 months.
Perfect.
So that kind of worked out for everyone in that respect. But I was told early in the pandemic, you're paying your rent. There will be no relief coming your way. We're not eligible for a PPP loan. You are. Go figure it out.
Go get it. Yeah. But it is different. I mean, EY is a great example where I'm in our 5 Times Square office, and we were bursting at the seams, and so we went and got some new space. I must say now, when you think about the future and the return to work, I don't know what we're going to do with all this extra space, because I think we've all proven now that we don't necessarily need to be in the office, right, to get things done. And frankly, we were kind of heading that way. As an aside, like I'm on the road.
This was inevitable, right? This was going to happen, but the pandemic just accelerated.
It absolutely accelerated everything. Yeah,
right.
Yeah, and so
that's exactly what happened.
Yeah. So in a place like New York City, I'm concerned for the landowners and the landlords there.
New York City is going to be in a world of hurt for the next 5 years.
Yeah. Whereas it's changing outside the city, where you're now seeing a lot of people moving out of the city, right? Including not just their residential, but but some of the commercial business activity is also changing as well, right?
Yeah.
Commercial and corporate activity. So it's creating a change. Unlike, you saw a little snippet of that. I referenced 9/11 before. You saw a little snippet of that with 9/11 when you had, the boom of Hoboken or Jersey City because of people leaving.
Yeah, I was trading downtown. I was a block and a half away when the South Tower fell. So I'm.
Yeah, you know exactly what I'm talking about. Yeah. Whereas this is different, right? People are making choices. Yeah, people are making choices that are longer term in nature, as opposed to something that's
absolutely.
Short. So it's an interesting.
And to my point that I made earlier, you just can't look at what happened in 9/11 and compare it to here, right? And even the 1918 pandemic, times were so different back then, and businesses were so different, right? Yeah. Back then, I'm sure Standard Oil was the biggest company in the world, right? And,
exactly.
What Arabia Railroad? I mean, something along those lines. Whereas today, it's Apple and Amazon and Google, and that's basically it.
The other thing that we get concerned about is I've done work on restructuring for municipalities as well. So I worked on the city of Detroit. And through its restructuring, and actually got hired by the state of New Jersey to help with Atlantic City to do its turnaround. And what I've learned from doing those is that now in certain places, a lot of these municipalities, their main source of revenue is property taxes, if not sometimes their only source of revenue. And so in some places right now, because of unemployment, a lot of people are just not going to pay their property tax bills. So, I know some of the states are scrambling, trying to figure out how, while they can on paper have a balanced budget, from a cash flow perspective, the reality is they don't.
Right.
And so, they got to think about how they're going to fill those gaps. And that becomes then a change in tax rules and tax laws that will impact all of us in our businesses as well. And
a change in services that's going to be coming, and their ability to fund services for their constituents going forward.
Yes, correct. Yeah. So there's a deeper level sometimes as you start going through some of your business decisions as to, not just what's happening to, your customers, for example, but as we touched on, suppliers, and even in the future, as you start thinking about, your taxes and things like that, as to what's going to happen to your business.
Yep.
Yeah.
And Nate, maybe you could just add some perspective.
Not that I'm sorry, I don't mean to be such a ray of sunshine, but but they're all things that we need to think about as we look forward.
But Nate, as we see companies trying to develop forecasts, usually one of the big underpinnings, I talked about auditing forecasts at the outset, but needing to have sort of reliable underlying information to help support that, particularly as you get into valuation and other, methods that are more reliant on those valuations. What are we seeing companies maybe have to do differently in terms of how they're gathering that support, what metrics they're leaning on? Has that changed in what we've seen recently?
Yeah, I don't know that it's been a huge shift to date. I think a lot of that is still, I think they've had to go back to sort of the underlying business units. So if you're in kind of a corporate FP&A function, I think there's been a lot more interactivity between them and sort of underlying business units to get the right and timely information, for a forecasting perspective. I think, we get a number of questions, funnily enough, we do help a number of companies with, Ben mentioned leisure forecasting. So we're looking at, foot traffic, for example, in a given area to assess whether or not we think that's going to drive some level of demand for hotels, right? And is that going to affect the occupancy rate? So I think there's interest in using third-party data. I think the actual usage of that third-party data has been mixed. I mean, we had a question yesterday. We were talking about exposure to bad debt, basically, on the residential, and then particularly on the small and medium business side, right? And so the telco was trying to figure out, what's my exposure there? Is that going to increase? Is that just masked right now by these PPP loans? And so they said, well, is there any benefit in looking at, you're saying look at unemployment, maybe you're looking at consumer credit delinquencies. Is there any benefit, like what's the incremental benefit of doing that versus looking at just your credit bureau score, right? So there's there's a number of things that they're still testing, right? I think they've gotten through the first wave, and I think that's been, largely because they've been able to, they've scrambled through things. But now I think companies are starting to take a step back and say, are there other additional sources of information that we should be looking at and looking for in order to build these?
That's helpful.
If I can for a second, Tom, one of the things that I said, talked about being a ray of sunshine, but we do have clients that I could turn it on its head, where they are the positive upside from what's happening with the pandemic, and we've said to them, cautiously, but go all in, right? Take advantage of the situation while you can and maximize on the revenues, make the investments, and you have to consider whether it's going to be a permanent long-term uptick or whether it's just temporary as to how you're going to invest that capital. But take advantage of it while you can, because when you can see this uptick, you've got to take advantage of it, because it's not necessarily going to be there in the long term. Or maybe you can grab, maybe you can create a market or grab market share while you've got the opportunity. So there are companies out there that, on the flip side of what we've been talking about now, are using their capital and investing in further and creating an even greater return for them at the end of the day, whether that's through volume, pricing, both, better negotiations. It's providing opportunities for those. And if you've got one, just carefully, but go all in. That would be my advice.
Thanks.
Yeah. Ben. Yeah, no, I was just going to add, I do think this concept, it triggered something in my mind. I think where we're seeing companies be successful is like if they've always had somewhat of a strategy of diversification, right? So, if you think about, like, I do a lot of work for broadcast and cable television networks. And so if you're embedded within sort of a larger company, let's say that isn't as exposed to sort of the entertainment side of the business, you get a lot of protection there, right? From a balance sheet perspective. And I think you're seeing that, the cable companies that perhaps are much more narrow and maybe only serve a particular niche of viewer, they're going to be much more severely impacted potentially, right? Because they don't really have other avenues, whereas other companies can take advantage of the fact, well, yes, sports is down, but maybe, news is up, and, now we have an opportunity to do more live events, and then sports will come back and things will shift. So I think it's that diversification piece and being able to pivot between those businesses that I think has been helpful as well.
Yeah, I mean, that's a great point. I've got a client, not in the tech industry, but they serve really all industries with the products that they sell, and they have a heavy investment or part of their business in hotel, leisure, which was tremendously impacted, restaurants as well. But they're also in janitorial sanitation supplies, and that has just totally boomed and taken off. And their top line's down, but those janitorial and sanitation supplies actually have a better margin. So their bottom line's kind of on track, if not even better. So you do see diversity being maybe a bigger, unless you were one of the really fortunate ones where the business you were in totally took off, the diversity has definitely helped. I know Jasmine posted in the chat just a question around G&A, and I think building off the question around, real estate, lease expense, I think we see companies also where, with the CARES Act coming out early on, the ability to try and keep your employees on staff and get some benefit for doing that, companies are having to reevaluate those strategies as the pandemic continues to go on. Ben, I think maybe from a restructuring standpoint, you see a little bit more of that. Can you share insights as to how that's evolved? And then for Ken, Greg, and the others, maybe how you guys and your companies are thinking about, headcount and that issue and other G&A.
Yeah, for sure. I think a lot of it is, again, trying to keep certain stakeholders or constituents on side, and in particular your lender. So, the last thing that can really kill you is just if your lender decides to pull the plug on the cash that you've got available to you. So in keeping them on side, obviously trying to get these types of loans is important. But what we've been seeing is in putting together projections, again, looking at cash flow, there's certain line items in the cash flow that are predictable and others that are not. Again, there's some that are smooth, some that are lumpy. We've actually told them, providing more clarity and more information to your lender is actually helpful. And really taking a closer look at what can you do to trim where you can. And it's surprising again as you kind of go to this new work from home type of mentality. A lot of expenses now begin to change, right? Whether it's something as simple as travel related type expenses, reimbursements for expenses that would normally be occurring, even something just as simple as entertainment has really dramatically changed. But but then started to get them to think about, well, there's a lot of cuts that you can make in your office that maybe you didn't necessarily have to have anymore. Like, you've got a cable service there, where maybe they want to have the news playing in their lobby as you come in. Well, just cut that for now. You can always get it reestablished again. And while it might sound like small amounts, as we all know, right, every little bit counts. And by the time you add it all up, you get to a pretty sizable number that over the course of X number of months, when you multiply it forward, can make a difference. And so I think that also shows lenders that you're making the effort to try and reassess your business and cut costs where you can. And so that's a huge difference there. So again, I would say it's being, open to, sharing the information with your lenders, as well as trying to be as creative as you can, looking at your cost structure.
I guess, Ken, Greg, any others on there, G&A strategy other than the real estate, how has that changed maybe beginning of the pandemic to where you guys are now?
So one of the things that we decided to do is when we were redoing the whole budget and looking through everything for the forecast in June was we were buying things as we needed them to kind of keep, just to not have to buy a lot of stuff. And we decided, we have a general idea of what we're going to use. We're going to use it regardless of what's going to go on. But so it was like not components for things, but since we have machine shops, it was a lot of things like bulk purchasing of welding gases, bulk purchasing of sandpaper and glue. We bought pallets and pallets of wood glue, like just stuff that we know that we're going to use. And because of we have a warehouse in South Philly that we were using as parking. And since we're not parking there, we now have an area to store a lot of this stuff. So we basically looked at what we might need for the rest of the year and bought all of it in June and July, so that we had all of those kind of bits and bobs throughout the rest of the year.
Can I call that the toilet paper syndrome? Remember when everybody ran out to get toilet paper? It's the exact same thing, right? If you figure there's a supply of something that you need and it's available, stock up on it, especially if you know you're going to use it. Yeah, it makes perfectly good sense.
And an interesting thing related to our business, but we've had experience, but a lot of our clients have experienced shipping. Like we're talking about prices going sky high, shipping prices just went crazy. So a friend of mine has a company that makes window air conditioners. They were done in January, and he's only been able to get like 3 containers from China back to the US since January. He still has like 9 sitting over there since January.
Wow.
Everybody, it's funny you mentioned like washers and dryers. These big companies are just elbowing out everybody, and he's literally like the day before a ship leaves or the day a ship leaves, they're just like, there's one spot, do you want it, here's the price. And he's just paying whatever he needs to get his containers onto these transports. So that's one thing that's just gone nuts. And I'm think of it like with gasoline prices, like it goes up real quick, but not sure how fast it's going to go down. And so I'm a little worried about how some of these smaller consumer type companies are going to be able to maintain this. But shipping was super cheap for a while, and it's like tripled or quadrupled overnight. And it stayed about the same for them. So,
yeah.
Are you all noticing our supply chain impacts? Like generally speaking, like we talked to a company yesterday that we wanted to just make some t-shirts for us, and they were like, our supplier doesn't have t-shirts. Like, and they haven't given us a time when they'll have them, and they just broke. Are you all seeing that, like in some aspects of businesses that you're working with or that you're dealing with yourselves, like that the supply chain is just no longer serving the needs of its consumers?
I think up and down the entire spectrum of supplies, whether it's toilet paper or paper towels, or whether it's technology, whether it's raw materials. as Ben pointed out earlier with lumber. And we've seen crazy price swings on all of these things, right? So, when I used to go to ShopRite, in February, I could literally buy these huge, mega packs of Bounty paper towels. With a coupon, I could get, like a 20 pack for $7 or $8. Now I get 6 rolls of paper towel. It costs me $25. I mean, it's just, it's beyond the pale. We saw it, you think about what happened with oil, right? Where oil, is generally a volatile price commodity in general, but we saw for the first time ever where, traders had to liquidate their positions on expiration. And we saw oil literally go to negative $37 a barrel, which means that you had to pay someone $37 to take that oil off of your hands. To see pricing swings go like that, we've never seen things like that before. Lumber has skyrocketed. And we see instances of these types of price swings all over the place, and people just don't understand how volatile pricing can be. You go back to the 1600s and the tulip mania, right? Where, the idea of buying a tulip bulb in Amsterdam went from, one price to like, 1,000 times that price in a few months, and then crashed back down when everyone got into the same trade. We see that all the time. And it's been exposed during the pandemic, but these things do happen, and you have to be very cognizant of these price swings and what they can mean for your business, and how to make sure that when you can get a supply of materials or goods that you need for your business, to make sure that you stock up and don't make sure you don't get caught short in case you get something like this that happens. I think it's a very valuable lesson.
And Greg, sometimes it can be a self-fulfilling prophecy, right? Where again,
Absolutely.
I think that's what happened with toilet paper, right? Everybody ran out to get toilet paper. We ran out of toilet paper because everyone thought they needed to go and get it, right? So now, like, if the prices of sandpaper skyrocket, we can all blame Ken.
I'm curious though, Ken, was that more out of concern that the supply wouldn't be there, or was it also an opportunity, as Ben was pointing out, there being opportunity? You guys had maybe cash flow on hand.
Yep.
You knew you were going to need it. By going and buying bulk, you got better pricing, and it made sense.
That was exactly it. As we kind of said, like, if anybody who was doing ordering could talk to our supplier, if there's anything that they thought we could get in bulk that would make sense that we can store in our warehouse, to just do it, because we're going to use the sandpaper, we're going to use the screws, we're going to use the wood glue. So, it's not going to go to waste. So might as well, if we can get a discount, pick it up. Because what we were doing now is, like, it was every other month. But then we were constantly running out and buying some retail too, which also sucks. But yeah, so we've been doing a lot of bulk buying and getting things in there. And actually, it's funny, I just pulled our last hardwood delivery. I had never worked with commodities like this before until I started working at NextFab 6 years ago. I went in there thinking, okay, we're buying a lot of metal and electronics. Their prices are all over the place. Wood is all over the place. It's absolutely crazy. Like, you can pay $4 a bird foot and $10 the next month, depending on, who else is buying it. And apparently the, what's it called? The fracking gas folks consume a lot of hardwood to build temporary roads to get in and out of areas. So there's different times of the year where you'll notice the wood prices will go up by 20 or 30%. There's a massive run on, like, cheap hardwood boards to make temporary roads. Also, right now, we get most of it from Canada. So there's also the tariffs on top of all of it. The retaliatory back and forth tariffs keep going on to stuff. So I know that's going away.
Well, I want to be conscious of time here. We're coming close to the 1:30 mark. So maybe what we can do, I'd like to ask Nate and Ben just to give some final thoughts around, as we're dealing with companies, what are a tip or two that we're giving to our clients, and anything we're cautioning them against doing as they're trying to forecast. Maybe we'll start with Nate.
Yeah, sure. Yeah, I'm trying to figure out what I didn't say. I was going to say, to comment on Ked's point, I think this whole notion of logistics has really just expanded, right? The cost. I think one of the hardest jobs to hire for right now, I have a friend who runs operations for a grocery delivery company, is drivers, right? They plenty of people who work the plant, but people who are trained to drive a truck, right? It's just so limited, right? Because it's been in such short supply, and I'm sure you're seeing that across the board. Yeah, I mean, I think a tip is, there's probably not a lot of certainty that you can place right now. So I think making sure that you're, working with, as many of your advisors and looking at sort of different scenarios for your business and understanding maybe at a deeper level, how your customer base is being impacted, which I think Ben said earlier, at a more granular level, and looking at, how can I use information maybe in a little bit of a better and deeper way here, to at least come up with a point of view. And maybe you have like 3 or 4 or 5 different points of view from different places. And, again, maybe to Greg's point, like, I don't know if you can trust anyone fully, but I think just having that range of perspectives, I think is critical for going forward. So yeah, I think that's probably my tip there.
Great, thanks, Nate. Ben, you want to add any final words?
Sure, I'll give 2. One is on the downside and one is on the upside. So on the downside, certainly as we've been helping with forecasting, and again, especially looking at how cash is spent, it's you got to go beyond kind of what you would normally do. It's a much deeper and bigger exercise than you've done before, because you have to consider, what it is that you're acquiring. Is it a good or a service? The health of that particular company, where that supply is coming from. As you said, tariffs is a good one. The ability to get it is another. Just, we've had to think about those types of things and dig in a little bit deeper in every sort of line item, quite frankly, as we've helped with our clients on forecasting. So you've really got to think outside of what the norm is when you're thinking about supply, because it's no longer a given that you're going to get it, and you're going to get it at that price. That being said, the upside is, don't always think about things the way you used to, right? There's an opportunity, as we talked, it's been mentioned to Greg, right? There's an opportunity to enter into negotiation. It might not necessarily might necessarily work in your favor, but there's opportunities to enter into negotiations. Ken, you said something as well. Or in your bulk buying, you've got the space, you might as well do it, right? If it's something that's not going to spoil. Customers, same kind of thing, right? You can, tell you what, I may give you some better pricing if you buy in bulk as well. Just something or pay in advance. There's all kinds of different techniques now that you have to think about that's different than the way you've normally run your business, but can provide you with benefit as well. So both sides of those is the kind of way I would look at it, but it's always a matter of looking at things a little bit deeper and a little bit different than you used to.
Great, thanks, guys. Well, I think
John,
Jazz.
Your closing remarks.
What was that?
We need your closing remarks.
Well, my closing remark is as follows. I think, I deal with public and private companies. I think companies are really all over the board right now with how they're dealing with forecasting. A lot of the companies I deal with are much more focused on longer term forecasting, and they're facing challenges they've never really dealt with before. I talked about a sort of a jumping off point. Oftentimes they'll look at, where the current year is forecasted to land, and they start, or Nate pointed out earlier, right? You're just taking a model and you're adjusting it. And those historical concepts have largely gone out the window. I think the best advice really comes back to planning for different scenarios. There's talks of second waves of the virus. We hear, although it's hard to navigate through the media, we hear spikes continuously. So I think having different scenarios laid out so that you can respond and react and maybe proactively try to drive your business initiatives to achieve what you're trying to achieve. I think that's the best advice, that we're giving our clients right now, and would encourage you guys to make sure you're thinking through those different scenarios and possible outcomes. And with that, I really just want to thank Jasmine, Anna for coordinating this, and Ben and Nathan for their expertise here, and Ken, Greg, and others who participated and joined today. I hope you guys, found some value in this. We'll make sure we share contact information here. But thank you so much for participating. I wish you guys all the best as you work towards the end of the calendar year here.
Sounds good. Well, thank you, Don. We are going to be having a couple more of these throughout the end of the year. The next one will be at Propelify during the week of Propelify Innovation Festival, October 5th through 9th. So we'll be doing a new agenda, but we hope to see you all there again, contributing and ready to share your questions and your feedback. And of course, we'll be sharing the recording and sharing a little bit more contact information after the fact. But if anyone has additional questions, you can always reach out to myself or Anna, and we can always connect you to Don and his team. And thank you all again for joining us today. And thank you to EY for supporting this group. And we will see you all soon.
Thanks, guys.
Thanks, everybody. Take care.
Take
Thank you,
care.
everyone. Take care.
Thanks, everyone.
Bye.
Bye.